All right. So, hello guys. So today we're going to be dealing with directors fees transactions. So we all know that directors are the people that shareholders put in charge to take care of their business and to basically, grow the returns in their business, right? So basically, the directors are running the company for the shareholders. So these are basic questions that you will find at the I think analysis at the end of your paper. So basically, I want to focus on directors fees as a transaction because usually they test it with like it's kind of like a problem solving type of question, right? So you have to break down everything. So I advise that you open the back of the paper, usually the back of the paper, I think it's blank or at the back, and just break down everything so that you can understand everything that you have broken down, right? So in this channel, each and every video will be designated for each and every transaction that you need to analyze, and I'm going to incorporate this for both the income statement and the statement of financial position. So yeah, basically, so the first transaction is this one. So basically I want us to go through this by analyzing it, right? So they give us the director's fee. They say it's 1,095,000. So the first thing that we're gonna do is we're gonna read the transaction, right? So the transaction usually comes with two directors, three directors. The other one was employed later on in the year. The other one did this. The other one was paid like this. So we're gonna like basically break it down, right? So firstly, they say there are two directors in the company, so that they put an emphasis on the two directors, right? So the two directors in the company, each director and same director's fee. So they're telling us that basically they earn the same amount. So we can note that down. So I'm gonna note director one, same amount. Director two, same amount or equal amount, right? Fine. You noted that down, right? So fine. Now this is our director one, this is our director two. So we can basically incorporate different information about them that will help us get that answer that we need. So they say one director requested the company to donate 30,000 from her director's fee, right, to Sivukide High School. This was offset into her director's fees and payment has been recorded. So what they're basically saying is that she donated the 30,000 to Sivukide High School, right? However, right, this is from the director's own amount. So basically the company took her income and they donated it to Zipugile High School, right? So now we have to take it back to show that we paid the director. However, she decided to donate the money, her own income. So we have to also state that we paid her. So basically we're gonna add back the 30,000 because it was subtracted and it's supposed to be added back, right? So we not that we do not care, but in this case we do not care what she does with her income. What we want to note down is that we paid her, and we want to note it down in the book that we paid her director's fee. Whatever she does with her income, it's all on her. Even though the money went from us straight to the high school, it doesn't matter, right? So that's what we note down. We're gonna add back the 30,000, right? Right? That's the first thing we do. Okay. Done with the first information. Now about the second director. The second director requested 1 month in advance. The finance committee agreed. Thus, the advance was paid to him. Okay, so we know that our income statement incorporates 12 months. So whatever happens outside the 12 months is not supposed to be part of our income statement or our statement of financial position. So whatever that was paid to him in advance, it has to be recorded in the next financial year, not this financial year. Yes, we paid to him. Yes, we paid him this year. However, it was supposed to be paid the next year, right? So basically, we know that we're gonna subtract something. We're gonna, let me say, X amount, right? Okay, fine. So now we note that. So this 1,095,000 it incorporates of the 30,000. It's 30,000 less, right? 30,000 less from one director. Also, it also incorporates of an extra payment from the second director. So what do we need to do to find the equal amounts that these directors get paid, right? So we're going to take this whole amount, 1,095,000, and we're going to add the 30,000, right, to find the equal amount that is paid to each and every director, right? So I get 1,125,000, right? So this 1,125,000, it's the 12 months for one director and the 13 months for the other director, because the other director was paid 1 month extra, right? So we're going to take this amount divided by 25, and then we're going to get each amount that is paid to them every month. And that amount is 45,000 rands. So this means that each and every director, they get 45,000 rands per month, right? One decided to donate the 30,000 to the high school. However, this is not our business. That's her business. However, we're supposed to note down that we paid her the 30,000. However, she decided to donate it to Tibukile. So basically, the accountant made a mistake by subtracting it. So for effect on income statement, right? So director's fee, right? So we're gonna take the 1,095,000. We're gonna add back the 30,000, and then we're gonna subtract the 45,000 because it's not within the financial year, right? And then that's gonna be our effect, and then on the income statement, and then the effect on the financial position. Let me just say financial position statement. You're going to go under current assets, because it's a prepaid expense, right? It's receivable. And under trade and other receivables, you're gonna add the 45,000 rands, because it's a receivable. It's a prepaid expense. We paid this expense in advance, right? And that's it. And you get your full marks. So it's basically easy. You just break down your information and then you get your answer. Then you're good to go, right? So they just make it, they make it seem like it's hard, but it's not hard. You just need to basically break it down, right? So you just break it down and then you break it down into smaller pieces, because those smaller pieces make up a hard question. So now when you start dealing with every small piece, every easy piece, then you can, solve the big puzzle. Yeah, and that's it. Okay, so our second director's fee transaction is a bit different. However, it's also a combination of smaller pieces that build up a big piece. So we have to basically break it down, right? So, the first tip that I can give you is break down each and every transaction so that you can understand it, right? Okay. So they tell us that the trial balance, they tell us that the director's fee is 319,077, right? So now we have to read, okay? So the company had. So when with the keywords had, it tells us that we're gonna have another director, basically. The company had two directors on 1 March 2025 who earned the same monthly fee. They earned the same income, basically. A third director was appointed on 1st September 2025, earning a monthly fee 1,089 less than the existing directors. All directors were paid fees for March 2026. So this tells us that each and every director was paid 1 month extra. This tells us that we're going to subtract because it's not within our financial year capacity. It's within the next financial year. So we have to calculate how much exactly do these directors earn. So to do that, this 1,089, it's on our way. So what we need to do is we need to add it back to see how much they earn, right? And then after, to find out how much the third director is earning, we need to subtract it, right? Because he earns or she earns 1,089 less, right? So let's start. So let's break it down, right? So we have director director 1, director 2, director 3, right? So the first director was paid for 13 months. Second director was paid for 13 months, right? The third director, however, was started working on the 1st of September 2025. So September, October, November, December, January, February, March, right? March, because he or she was paid an extra month. So that would be 7 months. So in total, that would be 13 plus 13 plus 7, 33 months. However, we want to equal this amount. For us to get how much these two directors are earning, we have to equal these up. So what do we do when you want to equal these amounts? We're going to take this 1,089 less, right? 1,089 less, times it by 7, right? And then we're going to add it back. You know why? Because we want to see how much equally do these two directors earn. These two. So that's the only way that we're going to find out, right? So in that case, I get 7,623, right? So they say that 300,077 plus 7,623 is equals to 326,700. What am I going to do with this full amount? All right, I'm going to divide it by 33 months. So basically, we're acting as if this director is earning the same amount as them. However, this director is not. So at the end, we're going to subtract it back. We just want to see hypothetically, if this director was earning the same amount as them, then they would earn this. Well, these two directors are already earning that. However, to find out, we need to, I don't know if it's a word, but make it equal, like equalize it, make it equal, right? So that would be 900 and 900 per month, right? However, this 900 and 900 per month is for the two directors. So I'm going to say 900 for the two directors, right? Minus 1089. And this is for the third director. So these two directors were paid 900 and 900 extra for the, not extra, but in advance for the next financial year. And this one was paid 900, but 9,900, but 1,089 less than these two. So effect on income statement would be director's fee $319,077, right? Minus, right? In brackets, you're gonna say 9,900 plus 9,900 plus 9,900. However, subtract 1089. Okay, work the brackets and then work this, then you'll find it. And then effect on financial position, statement of financial position would be, this is a prepaid expense, right? We paid our expense to, so basically it's not, it's salaries for directors, so it would act as an prepaid expense, so it's still receivable, right? We're still gonna receive the service, basically them working for us, we're still gonna receive it. So under current assets, trade and other receivables, we're gonna add 9,900, that's 9,900 plus 9,900. However, subtract the 1,089 because they earn less that. And that's it. That's basically it. That's it. So it's a process, right? So break it down into smaller pieces, and then you get your final answer. Thank you so much for watching. I hope you gained something out of this and you would be comfortable to attempt a director's fee question by basically breaking it down into smaller pieces.